Imagine this, a company as massive as Microsoft, embroiled in a decade-long audit with the U.S. Internal Revenue Service. Yes, you heard right. Today, we delve into the intriguing saga of Microsoft's ongoing audit with the IRS, a tale rife with questions about income allocation, expense claims, and a hefty $28.9 billion tax bill. Our story begins almost 10 years ago, around the time when Microsoft started addressing questions from the IRS about how they allocated their income and expenses for tax years beginning as far back as 2004. Over the years, Microsoft has made significant changes to its corporate structure and practices, making the issues raised by the IRS more relevant to the past than their current operations. Fast forward to the present day, the IRS has sent Microsoft a series of notices of proposed adjustment. This is the IRS's way of sharing detailed information about their views on the issues in question, marking the end of the audit covering the years 2004 to 2013. But this isn't the end. It's just the beginning of a new process to resolve these decade-old issues. The IRS believes Microsoft owes an additional $28.9 billion in tax for those years, plus penalties and interest. But this number is not final. Microsoft has already paid taxes under the Tax Cuts and Jobs Act, which could decrease the final tax owed under the audit by up to $10 billion. Microsoft, however, begs to differ with these proposed adjustments. They plan to pursue an appeal within the IRS, a process expected to take several years. The company insists they have always followed the IRS's rules and paid the taxes they owe, both in the US and around the world. So, what's the bone of contention? The disagreement primarily revolves around how Microsoft allocated profits during this time among countries and jurisdictions. This is commonly known as transfer pricing. The IRS regulations permit companies to use a specific arrangement for transfer pricing, called cost sharing, a method that many large multinationals employ because it reflects the global nature of their business. As we move forward, Microsoft remains confident about acting in accordance with IRS rules and regulations. They welcome the conclusion of the IRS's audit phase, which gives them the opportunity to resolve these issues at IRS Appeals, a separate division of the IRS that handles tax disputes. It's important to remember that this appeals process may take several years to complete. If a direct agreement with the IRS proves elusive, Microsoft will then have an opportunity to contest any unresolved issues through the courts. In the meantime, Microsoft will continue to work with the IRS and hopes to reach a mutual resolution to this issue in the coming years. They will also continue to share updates on significant developments through their public quarterly and annual reports and financial statements, as they have done throughout this entire process. As of September 30th, 2023, Microsoft believes its allowances for income tax contingencies are adequate. And there you have it, a decade-long audit, a $28.9 billion tax bill, and a corporate giant standing its ground. This is the world of corporate audits, where the stakes are high and the outcomes can have far-reaching implications. So, stay tuned as we continue to track this intriguing story. Don't forget to like, comment, and subscribe to keep up with the latest updates.